we are going to understand technical analysis, technical charts. Now, the first thing that that should be coming in your mind. So, how a stock price goes up and why and how it goes down. Who is regulating this, right? First question that should be coming in your mind. Second question that should be coming in your mind is, so who is making these charts? Who is sitting there in the background and creating these charts? And what can I infer from these charts? Means what are the things that I can infer from these charts? These are the something, these are some data steps we are going to study today. So there are multiple types of candles in this. So let's start. See guys, stock market basically works, you know, and it has a principle of demand and supply that is working over here, right? So there are two concepts because of which stock market either goes up or goes down. Number one, the real growth. If the country is growing or if the company is growing, then definitely the stock price is eventually go up, will eventually go up. I would like to say. Second case, stock prices sometimes goes up because of bubble as well. That bubble is created because of money supply. That is for time being. That is for very short period of time. So let me repeat myself again. The prices of stocks, they go up or down either because of demand and supply or because of real growth within a company. So the second step, the real growth within a company means if the company is fundamentally growing, we had already discussed the fundamental analysis, that balance sheet, profit loss statement, and the cash flow statement. If the company's profits are growing, you know, reserves and surplus are growing, operating cash flow is high, the company will eventually rise, the stock prices will rise, but it will be slow and steady rise. It's not something immediate. If people are having a lot of money, they start buying any individual stock. Even because of that buying itself, that price can go up. Let's see an example of Zomato. What I wanted to say over here is that Zomato was not a fundamentally good company, but still Zomato is fluctuating, right? Someone is buying, someone is selling. It means when people buy a company more and more, it starts going up. When they start selling a company, it starts going down. Demand and supply, as I told you. One more thing I would like to tell over here is that so this is called as bubble. So if a company is rising higher and higher and higher without having strong fundamentals, it means that company is high. The inflated prices of that stock is because of high money supply in that company. So it's a bubble. It will anyhow eventually burst. The same case happened with Adani Enterprises. The cost of Adani share is very high. It is not fundamentally that strong. How the prices are so high, so inflated? Because it is said, it's just an allegation that Mr. Adani himself and the relatives of Mr. Adani was trying to inflate the prices of the company. Now I hope you got the answer that, sir, how the prices goes up. Is it because of real GDP, real growth within a company, or is it because of the bubble or money supply? We have to be watchful. So that is why you should never go with the swing, with the sentiment of the market. You should never go with that. If you want to make profits for the short duration, fine, that's fine. But rather, I would tell you, see the fundamentals. If the fundamentals are very strong, it's advisable to invest in that company. Whether the companies rise, at that point of time, the prices are high or not, it's advisable. But if the fundamentals are not strong and you have invested in that company, eventually the share price after some time will crash. It is something that is going to happen. So this is first advice I would like to give you. Now, it is just like a game, when two people, it is called as a tug of war. Both the parties are, pulling the rope. Whosoever will put more force, the rope will go in that side. So there are two players, bulls and bears. Bulls are called, it is a term used for those people who are expecting markets to go up. So these are bullish people. Bullish means they want markets to go up. So they will buy more and more and more and more. And once they will start buying more and more, the stock prices will get inflated. This is what Harshad Mehta used to do. What he used to do, he used to buy the shares and put huge amount of money. And because of that money supply, the share prices starts going up. And because he was buying the money, people also started invested, and they also started the company start the prices started going up. But as I told you, it was not the companies were not fundamentally strong. Eventually, when he used to pull back, when he used to sell all the shares together, the prices used to crash. So right now we are discussing how the share prices goes up. Bears. So these are the people who are having bearish view in the market. They are expecting markets to go down. So what they will do immense selling, and because of those selling, the markets will go down. So it is just the pulling of the rope. Whosoever wins, the market will go in that side. If the buyers will win, it will go upside. If the sellers will win, it will go down. If the bullish people will win, so market will have a bull run. So if the bearish side will win, the market will crash. So this is how the entire concept works. Demand and supply, real growth, money supply, it all works into play. Now, being a smart student, being a student of investment banking and being my students, you have to be very watchful that whether the company is growing because of the sentiment, because of this game of money supply, it's a bubble or not, or is it real growth? Is the company really fundamentally strong or not? So if the fundamentally strong if you have invested your money in a fundamentally strong company, even for some time, maybe the share prices are going low, going down, the bearish people are winning, but eventually, with the passage of time, that company is bound to give you returns. It's a hard fact, and it's definitely going to happen. Now coming to charts, there are different types of charts. We are going to discuss this, and it's a very small topic actually, but we are going to do it practically, guys. We are going to apply all the things quite practically. So this is the chart. Now, how you can open the chart? You might be having some, broker, your account, a demat account with any broker. You can use these charts from there. If you don't have the account yet, you are a college student. I don't want you to start a demat account. I want you to start with free tools. So I want you to go to Google, right? In Google, I want you to type this thing, technical charts, economic times. That would be all. Economic times, technical charts. Once you click in it, the technical charts will open. You can open these things. It's quite free. You don't have to buy anything, right? So such kind of technical chart will open. This is for NSC, and you can make you can log in over here. It's completely free. You log in over here and you can save your own data. So this is how you can start your own technical analysis, guys. Now let's come back to the discussion again. So this is how you can access the technical charts. It's quite free, and it is, everyone can use these technical charts. I hope this is clear to everybody. Now, what are the benefits of technical charts? Why we are studying technical charts? Technical charts will tell you when to buy a share and when to sell a share. Now, let me repeat myself again. In the previous videos, we had already discussed that we had already sorted out good fundamentally strong companies, right? Using ratios, using balance sheet, financial statements, and using macros. Now, guys, even for example, let's open the chart again. Let's for an example, TCS. TCS was a good company. We had already discussed in the previous examples that TCS was a good company. But if someone buys TCS over here, just for an example, and after that it starts going down, it's a bad move. So that person would be suffering good amount of loss from 4,500 to 4,000, straight 500 rupee loss per share. If the person is buying the share over here, he would have made good profits, right? So the technical charts will serve a purpose of the entry timing and exit timing, first of all. Second, these are useful for trading as well. When you are doing swing trade, when you are buying today, sell tomorrow strategy, you are using that one, or you are investing for short duration of time. It is also used for long-term investments, but sometimes long-term investment, they don't, we don't need technical charts. You can use straight away good fundamentally strong companies. But if you want to increase your profits, definitely technical charts is the way. So let's discuss, how to start, what exactly these things are, guys. So, these are candles. You can see these are of the shape of candles. So if I enlarge it, right, then there's a wick over here, and these are candles. So these are also shapes of candles. So there are multiple shapes. You can see. If I click over here, it will become like this. If I click, it will become like this, like this. But guys, these all serve some kind of purpose, basically. And what we will be using, which one is more important? Because see, these candles are good, but these candles don't convey multiple messages. So the best candle that I would be suggesting you, that is, Hakinashi candle. Click over here. Now what would happen? The candles will become closely compact. These candles will be having colors, right? And there are different shapes of the candles. Each shape is suggesting something. So these are the candles, and we will be using Hakinashi candles. I hope this is clear to everybody. All right. Now, next coming to their, there's a time limit over here. 1 minute, 2 minutes, 3 minutes, 5 minutes, 10 minutes, 30 minutes, 1 hour, 1 day, 1 week, 1 month. This is for TCS. So guys, if I open 1 month, so it will tell the stock price of TCS every month. 1 month, one candle. Means, for example, in the month of this, it was at the range of this. In this month, it was at the range of this. So multiple months, it will be like this, guys. So for the month of October, it was at the range of 4,500. In the month of July, it was at the range of, so one candle for 1 month. So it is for long duration. So over here, I can straight away see, I can see what was the cost at 24, 2024, 23 in just one single page. So this is telling the span. This is telling the, how long the duration is. If I go for 1 day, so one candle for 1 day means for 1 day there would be one candle. So these are the dates, guys. On 6th, it was the movement. On 3rd, it was the movement. So it was the minimum and the maximum. So this is how the movements would be. This is how the candle moved throughout the day. What was the minimum? What was the maximum? What was the minimum? What was the maximum? Up to, and this thing, this is the maximum it hit, but it hit very fast, and this was a stable movement. So this is how we can find out what was the movements in that day. So 1 day, one candle. So it will be represented, 1 day would be represented by one candle. So 1 week, 1 day, 1 month, these are advisable for long-term investments. So whenever I am investing for long duration, I will be using 1 day. 1 day is more advisable. Means if I want to invest for, I want to do investments for 1 year, 2 years, or 5, 10 years. So I would be using 1 day or 1 week or 1 month to see the trend. But if I am doing trading, guys, so in trading, it is advisable to use 10 minutes or maybe sometimes 5 minutes or 15 minutes. See, so every 15 minutes there would be a candle. So if I use 1 minute, you must be using, sir, what is the purpose of 1 minute, 2 minutes? So every minute there would be a candle. But guys, it is not advisable. Why? Because the fluctuation will be so rapid, so rapid. See, every 2 minutes the candle is changing. Every 2 minutes there is a candle. It will become very difficult for you to analyze and to take a decision. So first of all, I never encourage trading. Whatever being taught in this class should be is it's for educational purposes. It's a disclaimer, and it should not be taken as an advice for investments. All right, now coming back to the topic. So if I make it 5 minutes, so it means now every candle is having a duration of 5 minutes. Still, it's very fast. It becomes very difficult to analyze the candles. Then, if I make it 15 minutes, chalo, it's fine. At least the movement would be slow, and you will be having good time to think. So this time donates one candle. So in minutes, if you are choosing time in minutes, it is especially for trading. You can choose in hours as well, but in trading, actually, it's very fast. Entry and exit is very fast, so it is advisable to choose 5 minutes, 10 minutes. And in investments, it is advisable to choose 1 day. 1 day means one candle is equal to 1 day. So What was the maximum, the minimum movement in that day? That will be denoted by one candle. What is the minimum and maximum movement in 5 minutes? It will be denoted by one candle. So over here, one candle donates 5 minutes, here 10 minutes, one day, 4 hours, 1 week, like that. I hope this is clear to everybody. So candles and timing are clear. I hope this is clear. So we are choosing one day over here. So because we are going to study today for the investment purposes. Now, these are the views. We can save the views. Now, studies. Now, we can, guys, over here, add various studies over here. Let's start from Supertrend. Supertrend is the name. I want you to go to the studies and enter the Supertrend name. Now, such kind of symbols would arise, and this kind of arrows would come over here. And let's open Reliance first. Reliance. So whenever you are searching for a company, you have to enter the name and the company would open over here. I hope this is clear to everybody. Now, before I proceed further, so this is something I just taught you. These are the candlesticks, right? So candlestick, give the price movement, indicates the market sentiment, visualization. It's become very easy line. It is very difficult to analyze the line, to intercept the line and all this. Let me give you an example, guys, over here. So this was the line. So it is very difficult to analyze this line. It's just black and white, right? Whereas the candles, it's very easy to analyze the candle. A red color means the candle is going to fall down or it is a falling trend. Green color means it is going up. It's trying to go up. It's buying. It's a buy sign. It's a positive sign. This is one thing. There are different shapes of the candle as well. I want you to see. See, there are multiple names of given to these candles. We don't want to learn the names. We are going to apply. We are not here for the theoretical class today. So these are hammers, inverted hammer, straight hammer. These are candles. Candle wicks are there. So these are the most stable candles. If the candle is long and the wick is towards upward, so these are stable candles. See, these are stable. This candle seems to have a stable movement. If the candle body is long and the wick is in this single side, it means it is becoming stable. If there are two wicks, upside and downside, it means there is a trend, there is a reversal that is going to happen. You can see this thing as well. So see over here also reversal is taking place. So if the wicks are twice, upside and downside both, so chances are there is a fluctuation going to happen. The market is quite volatile. So stable candles means long body, short wick and wicks both side, it means the candle there is going to be a reversal in the market basically. I hope this is clear to everyone. So there are multiple types of candles. There are inverted hammer, hanging man, like that. There are multiple candles and multiple way out. But this is more you will practice, more you will get to know. But if I tell you today in very simple terms, these candles are the most stablest candle, and we would be looking for such kind of candles. And these types of candles, where there are two types, the thread and the wicks are they're in both ways. It means it's not a safe place to invest because there's going to be a reversal. Market can go upside and downside both. So we have to keep this thing in our mind as well. I hope this is clear. So these are the names of candle which I had written over here. Doji, hammer, inverted hammer, hanging man. These are just the names. There, apart from this as well, there are multiple names, but we are not here to cram the names. We are here to analyze the thing, analyze the trend basically. What is the main role of technical analysis? We can get to know the trend, we can get to know the support and resistance, so we can get to know the timing, when to buy, when to exit. So one more question that should be coming in your mind, that sir, can charts predict stocks? The answer would be yes, but up to a specific extent, and it is not applicable to all the shares. This is something we are going to learn today, right? Now let me give few statements over here so that you have better clarity. Number one, can candle charts predict stocks? Absolutely yes. Can these charts predict, stocks for all the companies? No. For some companies, these charts, the accuracy could be 80, 90%. For some companies, it could be 10, 20, 30% as well. First thing means it's not applicable for all the companies. Second, it will it will have it will follow the studies, it will follow the research in investment one day. In one day, all our research will have a positive 80% efficacy, 80% efficiency. But in this, the efficiency will not be there. It will be around 30, 40%. It may vary, swing to swing means sentiment to sentiment. But generally, these charts are more accurate, more effective in 1 day chart, in 1 day timeline. So that is why 1 day is good. These are very less effective, or efficacy is very less in intraday. So that is why intraday it's a zero sum game. Sometimes you lose, sometimes you win. I hope this is clear to everybody. So charts can make profits only in long term. Charts can predict only in long term. Secondly, if something wrong happens in the market, something wrong happens like stock market, for example, corona crisis comes, or if some war takes place, even then the rising company means if this company was rising over here, Reliance was rising, it can immediately crash. So it will never reflect macro level activities. These charts never ever reflect macro level activity. So macro level research, you have to do it by yourself. These charts will never reflect that. So you have to keep an eye on news, what is happening politically in a country, in the world, any recession is coming on the way or not. So you have to keep an eye on these things as well. All right. Now, one more thing that I would like to say. These charts are just a reflection of sentiments of people, of buyers and sellers, as I told you. It is not the accurate sentiment, accurate reflection of fundamentally positive company. What I wanted to say, a good, strong, fundamentally good, strong company can also have share price very, very low. It can also have declining share price. It could have very less returns as well. Why I'm saying this? Because these are reflections of emotions and the sentiments of buyers and sellers. And emotions and sentiments, it doesn't care about macro level things. It doesn't care about as such fundamentally strong companies. So it could be a small company can also give you good returns sometimes, because these things are reflections of sentiments, reflections of, you can say, buying and selling. Who is winning? Who is buying and who is selling? If more buying takes place, it goes up. If more selling takes place, it goes down. So you have to keep volumes in sight as well. So we are going to discuss that thing as well. I hope this is clear. You got the answer. And can we predict stocks? You can predict good stocks in long run, but in intraday or in trading, it becomes difficult to predict. So the accuracy of stocks is very, very high during investments, but it becomes low during intraday. All right. I hope this is clear to everyone. So there, what are the scenarios, guys? Scenarios is historical application. This is something we are going to learn. And after this, what are the limitations that I already told you? Because sometimes it don't tell you the macro level things, and sometimes it don't tell, it don't reflect the fundamentally strong company that it should be. Means Adani is not that much fundamentally strong, but still the stock price is very, very high. The only reason is that someone is buying those stocks. And I told you, more buying the company, the prices will go up. So but sometime it's going to burst. The bubble is going to burst, and we are going to get stuck. So we have to see the financial statements. Very important. There is no escape from that. All right. Now, sir, what is the purpose and what we are going to discuss today? This is for Reliance. Now, first we need to see, once we'll apply these studies one by one, we need to see how it works historically. Let's see. This is called as super trend. First of all, this line is called as super trend. So now, whenever these red arrows would come, it means we need to sell the share price over here. It is the high time to sell it, because it is an expectation that market is going to go down after this. So if someone buys over here, if someone is not having knowledge, he just straight away buys. So it was a wrong buy, because markets are falling afterwards. But whenever these green arrows come, it means it's a buy sign. It's a thumbs up. You should invest your money at this date. Means not here, not here, over here. It's a good buy, right? So if I had invested my money over here, so that money would have grown from, you can say, 1400 to it would have touched 1600, 200 rupee profit in just matter of uh, 2 months. See, June and July. I hope this is clear to everyone. And in the month of August, it is here. So but now what you have to do, what's your homework and what you have to do? You have to take a small piece of paper, write counting up to 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, like this. Now we have to calculate the efficacy of these symbols first. Now this was first time that it got accurate symbol. So I'll make a tick over here. So first time it was accurate. I'll go to history. I'll go back. I'll go back. So there was again a buy sign, second buy sign in history. So was it a true indication? Absolutely. If I would have invested my money here, so after December, January, February, March, in the month of March, so over here it was 1200, in the month of March, 300 rupee profit per share. So again, it was a true indication. So we are analyzing, was this indicator having good efficacy or not? So third time. So over here there was a buy sign, it went up. So let's see, was it a true indication? Absolutely. Third time also true. So it means there was no false indication as such yet. So again, was it a true indication? Absolutely. It went up. So fourth time also true. Means out of 10 times, 4 times it has given true indication. Over here as well, it was a buy sign over here, but it was a short buy sign. Means it was a very short buy sign, but again, market went up. So if I would have invested my money, I would have made good profits, right? So coming back, so it was a false statement. If I would had invested my money over here, after that market fall down. So out of 6 times till now, only one time it gave a false indication. I am seeing historically how this indicator is performing so that I get to know what is the accuracy of this indicator. Now let's come back. Over here, there was a buy sign. Again, it was a very good buy sign. So seventh time, true, right? True indication. Again, it was a false indicator. Short, but false. So eighth time, it gave a wrong indication to me. This is how, guys, I have to analyze, the indicators for each company. And once I get to know that this indicator is accurate on this company, I will be investing the money on that. So again, ninth time, it was a very good and very positive indication. True. So I will put true over here. And last time, 10th time, let's come back. 10th time, again, it was true. So out of 10 times, 10 indications, 10 buy indication, it gives two false and eight were true. So what do you think, guys? Is it a good bet? Absolutely. Means if you are hitting a stone in the aim and out of 10 times you hit 8 times, again, it's a good output. This is what I wanted to say. So this is how we see historical data of a study. We see historical data of a trend. So this indicator is a thumbs up from my side, and it works on Reliance 8 times out of 10. So whenever you are investing your money now, I want you to see and wait for this buy sign. Don't just get up in the morning and invest your money. Just wait for this buy sign, guys. This would be a good option and good time to invest in the market and keep invested. So this is how we see whether the company, when to invest in the company. Secondly, whether the company is following the indicator or not. This is first indicator, guys. Similarly, I would be seeing the same indicator in TCS. I would be seeing the same indicator in all the companies. This indicator is called as super trend. But guys, there are few things which may not work. Means, sometimes I need some more accuracy. So I need to know when to sell, when to buy, sometimes for trading as well. So now, next I am going to use one more, study over here. That study would be uh, moving average. Moving average. So this is a moving average line, guys. You can see over here, there's a red line. This is a moving average line. It's a good line, actually. See, moving average, what it means basically, it is average of prices of the stock, Reliance stock, for last 10 days. So it's an average. So you don't have to think how these lines are created. One question was left. Who is making these charts? So guys, these charts are made on the basis of the data, and computer is creating these charts. So first data comes, then the charts are made. So if there is a crash in market, so these charts will be lagging charts. These charts will tell about uh, the stock prices after some time. So it would be a delay. All right. Now coming to the moving average. Let's see how it works. So guys, so sometimes what happens, so this is going to uh, give me inference that when the market is becoming stable or not. Now let's see. This was a buy sign, right? Buy sign came, but there were few fluctuations, right? And after this, it went up and it shoot it up. What I want to say, whenever the candles are in touch with this red line, with the moving average line, means it could be red candles or green candles. Whenever they're close to this red line, it means it's not stable yet. It is not stable. So it means the markets will be fluctuating like this. So the wicks are also see touching with this red line. Once it crosses and moves away from this red line, it means that now is the time market have become more stable. So see, it was now it started moving up. So it went far and far and far. Further it would go, it means it is becoming more and more stable. But once it starts going coming back, it means this line is pulling back. So again the chances are if it is coming close to this red line again, so it is market is again becoming unstable. So whenever the markets are near to this red line, it is not a right time for the growth. Means it means the markets will be fluctuating. Once there is, once there is a gap between this red line, see over here, there was a buy sign and there was a gap from this red line straight away. So it went up and up and up and up. So these candles, they maintained sufficient amount of distance from this red line. This is a good criteria for trading as well sometimes. So for example, I am doing trading. So I should not trade whenever these candles are overlapping this red line. I should never trade. I should only start trading once these candles go further to this red line. I hope you are getting the point, everybody. So this moving average shows the stability in the trend. And this super trend will tell you buy and sell, but this moving average will tell you the stability in the trend. If there is a good gap between the moving average and the candles, it means it is stable. The movement is stable. You should stay in the market. But once it is closed, you should watch what is going to happen because closer or overlapping these candles on this moving average, it means there would be a chance that the market is either going to stay in this region because it's like pulling, it's like a magnet. It will try to pull the market back. I hope this is clear to everybody. So we are combining two strategies together, moving average as well as super trend, to make our prediction better and better and better. Still, there should be some misconceptions. There should be some doubts. Sir, you know, is there some another, thing that I can combine? Definitely. See, you can do one more thing. You can delete one thing. You can keep only moving average. Now, what this only this moving average will let you know that when to do a trade or not. So if I am here, I will wait. I will not trade. I will only start trading once it moves away. And I will invest over here and then it starts. And once it starts coming close to this, I can exit over here. So I can apply two studies together as well. So super trend as well, I can apply over here. So super trend would also come. Now there is one more thing which I would like to tell you along with this. That is Bollinger Bands. Very interesting, guys. This is, you don't have to study this. It is completely pictographic. Just by seeing the trends, you can make a mind basically. Bollinger Bands. It is something very interesting, guys. See, it seems like quite hodgepodge. You have so many things are coming on the way. But let's tell you how it works. Now, let me remove the other lines first for the better clarity to you. Let's move the moving average and let's move the super trend. Now it's only the Bollinger Band. Now let's see how it works. It's again very interesting. Now, one thing that you should be doing, that is you have to see the historical data. You have to see, you have to apply every study for last 10 times and see what and how this study is behaving. So guys, in this Bollinger Band, there is a range. These are walls basically, right? So in the center, it is just like moving average, right? So if the candles are moving away from this center line, it means it's a stable market. Or if the candles are just near to this center line, it means the markets are still unstable or they can fluctuate any point of time. This is one point. Second point, Whenever the walls of this Bollinger Band constricts, means over here it is constricted, it means it's going to burst in future. So it was a constriction going on. They were very close, very narrow. So over here it busted. And once it busted, you can see the candles also moved away further from the center line, and it also expanded. The walls also expanded. So whenever there is an expansion, it means now market is going to burst. Market is going to stay there like this. Let's come back. So let's see some more constriction. So it was a constriction over here. So it means market is going to burst. Market busted. So we have to wait for the constrictions, guys, to see the the outburst of the market. Now, in which direction market could outburst? Market could outburst depending upon the colors of these candles. If the candles are going downwards, so it means market will outburst, but in the opposite direction. If the candles are going upward, the market will burst, but in the positive direction. It can move in any direction. So using these Bollinger Bands, I can see when the market is going to burst. See over here, there were constrictions basically, and the market outbursted after this. See, market started going up. It is expanding. Again, there was a constriction. It expanded but downwards. So we have to see when it is just like a pipe, guys. So whenever we press the pipe tends to expand further, just like that. Just imagine it just like a water pipe. Whenever I'm going to constrict it, it's going to burst, it's going to expand. So over here, there was a constriction for a long period of time, it expanded. Now let's combine two or three, you can say, studies together. Let's combine Supertrend. Okay, now Supertrend is also here. Let's combine moving average over here as well. Now I have added moving average and Supertrend as well. Now, guys, this is the right time. So we are combining two or three things together. Buy sign is also there. The moving average, the candles are also away from the moving average, means it's a stable sign, and the walls are also expanded. So it means the market is still going to expand. It's fine. So market expanded. So it was a good thumbs up sign for us for investments. Let's scroll backward, guys. Again, buy sign. The walls are very expand. So it means market are still going to be far. The candles are away, moving away from this moving average. Again, it's a stable sign. It means there's going to be a growth. So guys, it means I combined three studies, and all these three studies are giving me same indication. Yes, there is going to be a outburst. Very simple. Now I hope you got the point, guys. The point number one, that I can combine all the studies together, and I have to see historically how these indications are giving me results. There was a buy sign. Moving average was also saying the same thing. It's going to be a stable jump, and there was an expansion in the walls of the Bollinger Band as well. So all the three indicators, they gave me same result. So what I can conclude from here is that yes, markets are going to go up. So why I'm combining two or three researches over here? The reason behind this is that it is going to give me increase the probability of profits, and it is giving me clear cut indication. Now instead of one indicator, I am combining three indicators together. So this is definitely going to give me good returns. Now when I started my class, I told you markets go up either by real growth of the company or country, because Nifty will go up with the growth of the country, or because of money supply as well. When the money supply will increase in the market, that will increase the markets, that will inflate the markets. So money supply, what will the effect of money supply? People will buy more. So buy more means volumes. So it is again a very important thing. Studies, go here, write volumes. Volume. So there would be the volume chart here. Here is the volume chart, guys. Now, this volume chart will tell you the number of buys and selling which is taking place in a day. There was a buy sign and there was green chart over here. It means many people were buying. There was a buy sign and see the green bar over here. It means so many people purchased a day before. Just imagine. There are people who got this information a day before, though they purchased a day before itself. So your indicator gave you indication after one day, but people purchased a day before it, this indicator. So what I am seeing over here, that whenever this buy sign is coming, people are also buying. So these are the buying guys. So over here, if I tell you, so these are the numbers: 75 million, 50 million, 25 million people. They are buying or selling. The red color means these number of people sold. Green color means these number of people for buying the share, buying the stock. So you have to keep an eye. Sometimes all of a sudden a time would come that all of a sudden people would start selling the share. So it means something wrong had happened. You have to see why the people sold. So many people sold the share over here. Something might have happened. So you have to see the news. So there was a sell sign and see so many people sold over here at this point. So see guys, this selling will tell you means as I told you, if more and more people are selling, it means it's going to fall further. So over here, so many people sold. Again, some people tried to buy over here, but again selling took place. So it went further down and down and down. What I again wanted to say, if more selling takes place and if the volumes of selling is increasing day by day, the chances are that these people, these are bearish people. I hope you remember this thing as we had already discussed this in this chart that if these bearish people will win, they will bring the markets down. And if the bullish people will win, they will bring the markets up, right? So same thing happening over here. If more and more buying is taking place for long duration of time, it is eventually that they will take the market up. But if there is more selling taking place, see over here, the red color is more than the green color. It means they're going to bring the markets down. Short selling is taking place. So in such times, it's not advisable. Over here, the red color is decreasing and green color is increasing, and buy sign also came, and moving average also showing the same thing. And there was a constriction in Bollinger Band, means it's going to expand. See, it means there are more buyers. So bullish people they took the market up. So this is how the market went up and up and up. So we have to combine all these things together, guys. Volumes, we should be combining moving average, we should be combining Bollinger Band, super trend. Just imagine we have just touched only 3 or 4 studies till now. Just imagine if we can combine 5, 6 studies together in different charts, your chances of making profits will really increase, really increase. And this doesn't even need fundamental analysis. This thing can be used for technicals for intraday as well. So this entire stuff can be used for intraday. See, the same concepts can be used in intraday, but in intraday or trading, the efficacy becomes quite low. It is very, very low. But still, this is your homework, guys. Now, I told you the application of all these charts for one company. I want you to explore the same charts and apply the same charts in all your favorite companies, all the good companies. That would be really beneficial, right? Now you enter the company over here and you can do the same thing. The same concepts can be used over here itself, guys. See, the same concepts can be used in economic charts, economic times technical charts as well. See, there's a super trend, there's MACD, we are just going to do it. ADX, we are just going to do it. These are the volume charts as well. These are moving average as well. Same concepts are there in all the browsers. We don't have to worry. There are pivot charts as well, but I'm not going into pivot charts. We are just going so that you can start investing your money. So these charts are more than sufficient. One more thing I would like to add: more charts will make you more confused. You have to shortlist 4 or 5 your favorite charts, which are used throughout and which are good as well sometimes to use. All the public, which are used by all the public. As such, there are so many studies. See, there's so many charts which are available. You can apply all these studies. And I want you to apply. Being a student, you should be exploring all these things, how these things work. And anyhow, they are going to give you good returns. But these are the things which I'm telling you. These are commonly used, and these are something which you should be knowing as well. Right now, coming to one more study, MACD, moving average conversion and divergence. How it works? Let's see. Over here, the black colored line is MACD line, and red colored line is called as selling line. So if MACD line is black color line is above top, it means markets are stable. This is a good chart, huh? By the way, MACD is a good technical indicator. And if this red line comes above, right? If this red line is at the top, it means now the red people are going to rule. Means it's going to be more selling. So it is not a good sign for investing. So over here you can see the candles came close to moving average, not stable sign. It is also getting constricted, not a stable sign. Means something is going to happen in future, but right now it's not a good sign to invest. So I am telling you when not to invest as well. So these are the signs, when the red line is above, when red line is above the black line, it is not a good time to invest. It is definitely not a good time to invest. When the candles are overlapping this moving average, not a good time to invest. When there is construction of Bollinger Band, not a good time to invest. We have to wait when it expands, right? Now coming back over here, the black line overlapped. The black line came above the red line, and there was buy sign. The moving average, the candles, they are above, they are quite far away from the moving average as well. So all the indicators are giving good indication that yes, the markets are going to be stable in future. So there will be a good buy sign. It's a good buy sign. So if you invest your money here, so all the indicators are giving the see one more thing I would like to tell you. Moving in MACD is giving you indication before Supertrend as well. So you can see over here it says the markets have started becoming stable. See, but this was the best sign time to buy. So if someone had invested over here from, it's around 1100 something, so it went up to 1468. You can say 1500. So 400 rupee profits per share. You can expect. So why I'm telling you this thing, guys? We are combining two or three studies together to have better to shortlist better companies, and these companies, in all these companies, they are different technical charts have different efficacy, different efficiency. In some companies, for example, like Tata Steel also observes, all the technical charts work well in Tata Steel as well. I want you to explore the companies in which these technical charts work in a good way. If these technical charts work in a good way in a single company, if that company is fundamentally strong as well, so you have got your 1 hour of this class is done. Means you can start SIP in the company. How? Whenever these green signals comes, start investing some money. That's it. Means if you have 2000 rupees spare every month, wait for this green signal. Whenever this green signal come, keep those 2000 spare and invest during the buy time, or you can do training as well for short period of time. So this is how you can use these, technical charts, and these technical charts can be used for swing trading as well. Means if you are a college student, you purchase the share over here, when you see good profits, sell it off and just enjoy the money. So these technical charts can be used for, these are very beneficial for short term. For short term, there is no exception, you have to use the technical charts. So if I summarize myself, for example, Reliance, the first step would be I will be seeing the macro level thing, geopolitically, worldwide, then India wise, then sector wise, what are the returns I should expect from this sector. Then I should be seeing the ratio analysis, then profit loss statement, balance sheet, cash flow, then investors, who are the investors. Once the company is shortlisted, following all these processes, then I will keep the company in bookmark. I will keep the company in watch list. Then I will wait for these signs. It's not that I have to invest every month or every week. It's not like that. Big investors like Rakesh Jhunjhunwala and all these Warren Buffett, they invest once or twice in a year. But for that once or twice in a year, they keep an eye, very strong eye on these technical charts. Whenever all the things get aligned, astrologically stars, technical charts, fundamental analysis, all the things are aligned. They hit the hammer and they wait for that point of time. It should not be a push that I have to invest every day. We have to wait for the right time. That is the only way to find a good company. And the same thing you should be doing for all the companies like TCS. Same charts I want you to apply on TCS. How many times it is accurate in TCS? Same process you have to follow. Then I want you to apply on Tata Steel as well. Tata Steel. I want you to shortlist few companies in which out of 10 times these charts they give at least 8 to 9%, you can say 80 to 90% accuracy. If it is so, then guys, that company is good company to invest. So this is just an advice. And the thing is that these technical charts will tell you now when to buy and when to sell. So if you are going for a very long period of time, keep holding the money for 5, 10 years. Anyhow, it's going to give you good returns. So if you want to, enjoy the profits, invest here, and whenever you feel like the profits are good, you can easily exit from that company. I hope this is clear to everybody. Now, this was about technical analysis. So technical analysis they are not always true. They have some lag as well, means some event has already taken place and technical charts will tell you later on. Then at that point of time, you had already invested all the money. They fail in macro in macro level events, they fail straight away. Secondly, they sometimes fail to predict the fundamentals as well, because it is basically dependent upon the money supply and the demand and supply. All right, and it is not applicable on all the stocks. And so we had already covered Supertrend, Bollinger Band, moving average, MACD, volumes. In the next coming classes, we will be discussing the another technical charts as well. So, guys, I'm really thankful that you listened to me so patiently. Thanks for your time.